Good morning, YouTubers. It's a very calm and collected day in the wonderful market that never goes down. So, we just had a 2.5 hour long conversation about this market, right? And unless you're not seeing it right, you understand now the concept of a market that doesn't go down, right? We have most sell offs are happening in the overnight session, and the next session, we're just in recovery mode already. Unless you're obviously, like I said yesterday, delusional. And I wasn't trying to be subtle about it, and I'm not really trying to insult you. If you weren't making money yesterday, now today's turning into a pretty kind of great day also. If you're not catching the key concepts of the wonderful market that never goes down, the faux show bro trade that confirms that, if you're not fully understanding the power and the enormous magnitude of UVXY, stop trading, because this has been by far, there's never been a year that started off as good as this year. We've only had 42 trading days, I believe, so far. 15 of those days have been days that if you saw one of those, you'd be happy. So let me reiterate. You get 5 to 10 incredible intraday reversal trades days like that, 10 to 15 a year, maybe. We're 42 days in. We've had 15 already, where the market has had a massive gap down or up. We had the intraday reversal from the upside a couple of weeks ago. So those gaps provide the trade that we love so much, the foes and the shows and the bros and the rollovers and the blow off tops and the finger of God. If you're not seeing those trades correctly, a trade that works every time that shows up, and again today QQQ is an example, UVXY short. If you're not doing these trades, first of all, if you're not long the Qs right now, in some respect, you're not day trading correctly, because this is a trade that works 100% of the time, right? So if you're not taking a trade that works every single time it shows up, then you better have something that works every single time that it shows up. So if you don't have that, maybe take a QQQ faux show bro VWAP break trade the next time you see one, especially in a market that you've already established refuses to go down. And when it goes down, the comebacks are equal and bigger and greater than the sell-offs themselves, otherwise known as a bull market, which we're still in. So these concepts that we demonstrate each day get reinforced every single day. So today, which was odd, one of the best trades of the day was Coles. Nobody's thinking that this is going to be some juggernaut trade, but as a VWAPian earnings reversion VWAP trader, you know exactly why this was an epic trade. Sells it off on the first knee-jerk reaction, immediately breaks VWAP, blue line to orange line, classic. You're getting paid. Market opens up, wham, the shorts get squeezed again. But here's why this year is something special. When you miss a first entry or your second entry or third entry, the wonderful trading environment we're in, especially around VWAP, you're getting chances to buy these stocks again at prices where you want to be involved. Fake them out, shake them out, VWAP, hold. And then inevitably, this finally became a short for some people, and they're still short because this thing has not broken back above the level where they're short, and it's just making a new decision right now. So the long trader cashed out here and is debating whether or not to get out of the rest. The shorter who's short here has cashed out of some because it hit VWAP. So right now the market, this stock's in limbo. The short is waiting to see if the rollover happens. The long is going to get out if it does. And that's a trade that's still on for some people. And depending on where you got in, you're just working this trade and just waiting to see what happens next. Then you had HPE, which, again, kind of choppy, but remember, still a bull market. And maybe you are that long bias trader who doesn't take shorts, and I don't blame you because it's a terrible trade most of the time. So you're waiting for those faux show bros to confirm. And this is a trade where it's not a monster, but it's a day maker with low risk. So let's say you didn't catch the first faux show bro VWAP break and you got paid. Then you got stopped out and little faux show bro action there. This was the one that I got involved in, a small little win for me. Little faux show VWAP break, 2150 got me 2185. It's $200 right there, no big deal. Got stopped out on the rollover, and then you had a little faux show. Didn't even see that, but then check this one out. Fake them out, shake them out, VWAP, and you get your shuffle, and you see how the prior day VWAP acted as its support. Now you've got another low risk trade at the same exact price where I bought it earlier at 2157. Here it is again, 2157. Trade did well for you earlier. Now, why not take it again with even less risk because you have prior day VWAP acting as support and this level right there, clearly identifying a new trade. Why not put it on? And 2150 gets you 22. Remember, as a day trader, you're just looking for low risk trades to get paid on. And if you do 2 or 3 of them, usually that's your day. Today was obviously QQQ, wonderful. Faux show bro VWAP break, you're getting paid. UVXY short, almost a guarantee. Rolls over, breaks VWAP, short the stuffing out of it. You see what I did there? Short it, make money, right? So you go back to the repertoire of trading. We're always looking to buy faux show bros on the Qs. We're always looking to short UVXY, right? And then you go to check on your earnings reports. HPE, nice. Coles, nice. Long trade worked 3 different times. And now, like I said, the stock's debating what it wants to do next. And then you had something that maybe nobody's even heard of, because I can't even remember the symbol now myself because I didn't trade it. What the hell is the symbol? Something about something. Where is it? There it is. UEC. Right? UEC. I saw the word uranium in it. I was like, all right, let me check it out. Drifting down all morning, crushed the shorts at the open. You missed it. But then you say to yourself, hey, I love a faux show bro VWAP break on a stock that reported earnings. So do I. There it is. Faux show holds it back above VWAP. Buy it. 14 and a quarter. 14 and a quarter gets you 1464. Not a monster trade, but once again, a day maker. So a little HPE, a little Coles, a little UEC, just taking 20, 30 cent trades, 40, 50 cent trades when you're risking only 5 or 10 cents, mixed in with the Qs, little UVXY short, and welcome to March 10th, 2026. You are a profitable, consistent trader, just sticking with the plan. Not worried about swing trades or what Rambus is doing or your silver trade or the health of the market or geopolitical events. You're living in the bubble that is VWAP trading. You live in intraday. You're not concerned about anything else but what we're doing here. You make that money. It's in your account, and now legitimately your day is over. And now, let me just reiterate one more thing. The market correction slash crash that I've been predicting, I believe happened. It happened Sunday night, and we predicted it. We stayed short over the weekend. We got paid. I left 8 grand on the table. Pretty mortified about that. But once again, I was forced to cover. Hence the reason I say the market never goes down. And by the way, this Geo is actually working out if anybody did buy it, because we just got ourselves a 1 minute multi-day VWAP reversal on a stock that's going coming off lows. This is why I like markets to go down, so I could find opportunities like Geo, finding some love down there, kind of like the Alcoa yesterday. Again, I'm a bear, but I'm a bear with purpose. I'm also a bear that lives in the harsh reality that the market never goes down. So now, if you're just joining us, I think you finally might understand why I say that every day. We clearly, or let me speak for myself, I clearly do understand that the market can go down. I've seen it, I've lived it. It worked Sunday night. But if you live with that mantra that shorting is short lived and you're going to die, and the market never goes down, you then see the market a little bit more clearly. You understand the folly of the shorter who does believe that we could go down for more than 3 days in a row. We generally pivot on that third day, if you even get to the third day. So if you remain long biased as a day trader, you're going to be fine. Somebody once said to me, I'd like to take advantage of some of these trades, but I don't like shorting. I don't understand it. It frightens me. Good. You don't need it. Wait for the turns, wait for the faux show bros, and you will be fine. Because there is so much opportunity on a daily basis that it is amazing. It really is. And that's why I'm literally amazed every day. And here you go. Here's a trade that I didn't even have on the, was on the back burner. I saw this Geo stock. And if you guys know about this thing, it was one of our swing trades from like 5 years ago. We had a really good trade with it. One of our members brought it to my attention. I was like, I'm in. I like it. It was coming out of $5, $6 range. It was a multi-year VWAP break. And you saw what happened to it. And now it's crashed back to that 5-year VWAP. I just happened to notice it the other day. And then I looked at the chart today just to check on it, and it did this. I was like, oh, look, it's a 1 minute multi-day VWAP break. And this is a trade where it's, gone, let's call it 13 and 7/8 to 14 and an eighth. That's a living. These don't have to be those, you don't need a Costco going up 30 points to make a living as a day trader. You need low risk trades for medium rewards. And sometimes the medium reward becomes larger, exceptional, and your base hits quite often become doubles, triples, and home runs. You don't go into a trade thinking it's going to be a home run. You just want to make money. And that's why you never get out of your entire position at one price. So finding ideas, again, it's not difficult once you understand the market mechanics. And here was the only other trade that I did today. Congratulations, everybody. Now you could cash out of a little bit more of it. It's hymns. So let me go grab a cup of tea or something, and we'll talk about this trade and how important it is to understand what's going on here. As a shorter, you want to short something, it better look like this chart right there, where VWAP is up here, prior day VWAP's down there. You've got a gap that's being sold into. You have a reason to stay short. And it's not just because I think this stock's going to zero. I shorted it once it confirmed that it's going down. I'll be right back. And by the way, if you don't know, I think you do know. I'll have to go dig up some vinyl today. Dust off all my Boston LPs. If you don't know, the lead singer of Boston passed away last night. And now you know. So, welcome back, my friends, to the show that never ends. And it's VWAP Trading. So I said something that might have been insulting yesterday. I said if you weren't making money yesterday, you probably should stop trading. I wasn't trying to be subtle. Yesterday was special. Today is pretty decent as well. But if you're not getting the key concepts, right, then if you're losing money in this market when you've had 15 of the best trading days in the history of trading already, you're clearly doing something wrong. And stop what you're doing. Try to embrace what's happening here. So I'm going to carefully explain what you're witnessing here on this HIMS trade, and this is how you should be trading. This is what I like to call confirmation, bias confirmation. Hang on a second. Okay. Hey, what was the other one? Coles, UEC, HIMS. HPE. Oh, I forgot to put HPE on the list. That's what it was. All right, but let's stick with the Sims trade. It's important. It's so important. I'm going to have to show my face. Hello. Let's see if this works. Uh-huh. Yes. There it is. All right. So, a lot of what we do gets lost. Or let me say, a lot of what I do gets lost if you're not here for certain segments of the show. Generally I'm going from around 8 o'clock in the morning till 12 o'clock every day. So it's 4 hours. And if you miss some concepts, especially talking about individual trades, right? If you miss an original entry, then if there's not another entry on that stock, we're in the milking part of the stage, or the working the order part of the stage. Means nothing to you, right? So my plan for 2026 and beyond is to get as transparent as we could possibly be. So, I've been talking about launching a second product for the last 15 years. Most of what I do is live trading and teaching while the market's open because that's the best way to learn. I'm going to take it to a whole nother level soon. So the night before, if there is something to talk about, but more importantly, pre-market, you're going to get an email, but not just an email that says, "Hey, I'm looking at this stock." You're going to get an in-depth view with my charts and a voiceover of the levels I'm looking at and how to prepare for the trade. And I'm going to demonstrate where to be buying it, where to sell it, and then possibly look to take the other side. Then, just to make sure that nobody's screwing it up, we're going to add something special to it by using this rangefinder or the alert system that they already built. And I'm going to get somebody just to man the ship, basically. So while I'm talking and I'm going through these trades, we're going to be entering in the system. If you're still short HIMS, we're covering at this price some of our position. So you're going to get your idea why we're doing it and then update it throughout the day. So then nobody's going to be on the wrong side of these trades. For instance, the Coles trade, which was a nice little long trade and now has morphed into, not, again, the long trader would have sold here. And like I said, the stock's in limbo. And when I say it's in limbo, it's because if you were long the trade, you sold some here, you sold some here, and you were looking for 17, you might have got stopped out. The long trader still could be in this because it really hasn't broken VWAP yet. The shorter who shorted here has covered some, but not covered more of it because they're waiting to see if it rolls over and breaks down. So the alert right now would go out, and I would basically tell you exactly, depending on what side you're on, where the new stops are. For the shorter is looking at these levels. The long trader is about to get stopped out of the rest, and the short is hoping it goes down to 15-14. So getting that, we're taking like an alert system to a whole nother level. And that's the kind of only way I would do it. And that's what we're building right now. But if you're live with us, and obviously it's the best to be live, to see these trades happening while they're happening. So let's go through this trade one more time. And the reason I love the HIM short is because this is what I like to say, bias confirmation, right? So when I was a kid, my mentor Isaac taught me a lot. And just like the Jesse Livermore books, you read that book now, you listen to the concepts, it all still works. Isaac was my Jesse Livermore. Everything he taught me still plays out today because the key concepts of trading still are in play. The fades, the gap down buys, the gap up sells, your dash for trash, seasonality. Guy taught me a lot about everything. More and most important things he said is never get out of your entire position at one price. That was taught to me, and 30 years later, it's still the most important part of trading. But he also told me not to be biased when you're coming in the morning. Don't think to yourself, all right, I'm buying today, because it's going to take your brain a little bit more time to actually execute a trade on another unbiased or against your bias. So, for instance, if you came in today thinking you were going to short something, you might not appreciate the faux show bro VWAP break on the Qs because your brain's thinking, no, I'm looking to short something, and you might not see it right. So it takes that extra step. And then as he said, it takes the extra step to realize that you don't know what you're doing, right? I'm glad you, what he used to say, what you think you know, which is, I love that saying. I'm glad you think that, what you think you know, and then to take the right side of the trade. For me, I have biases, right? But I know that's not good. So I use VWAP to confirm my bias or my belief. So I love gap fading and I love faux show bros, but remember that still needs to be validated by the VWAP. So if you were debating whether or not you were going to go long today, the debate's over with a fake out, shake out VWAP break on the Qs. The debate is over. Your bias, well, my bias of the market never going down is being confirmed right here. I understand the market goes down from time to time, but it ain't going down today. Faux show bro, VWAP break. I'm not going to be on the other side of this trade. So let's go back to the hymns for a second. Bias, confirmation. My bias is that this stock is going to zero. No doubt, 100% convinced this stock will be delisted. This company, they're all going to jail. They sell bullshit products, and they're going to jail, all of them. And the stock's going to be at zero. But it was gapped up today on some bullshit news. I don't care what the news is. Now I'm looking for that confirmation. I got a gap on a stock that I believe is going to zero. Let me know when the coast is clear. Classic. Lower high, lower high, lower high, lower high, VWAP break, lower high, lower high. I mean, if you're not seeing the downtrend there, lower low, lower low, lower low, break. So that is my confirmation. VWAP break, the inability for it to stay above it, confirming the downtrend. Now, on the low of the day break, right here, the low pivot point, I could go short. And in this case, I know something. I don't know it's going to go to the orange line. I know that's my target because we've seen it happen a million times, blue line to orange line. But what do I know? What do I know? It's good to know things because nobody knows anything, right? We've established that. It's a fugazi, it's a fugazi, it's a fugazi, it's a woozy, it's a wazi. Nobody knows anything, right? You do know you love some Alcoa. I see what you're doing there. But what do you know, right? Try to live in the world of what you do know. You do know that if you're shorting it here, that it breaks above the VWAP, you have to admit you're wrong, but you don't get out of the entire position at one price, even when you're wrong. You know if it breaks here and back above there, you're pretty much wrong. So you give yourself some wiggle room to be wrong. You don't get out of your entire position at one price. You know that you're shorting it because it's rolling over after a confirmation of a VWAP break. You also know what? You also know that stocks tend to go from blue lines to orange lines once momentum is confirmed. So that's your first target. So how do you identify risk reward? If I'm shorting a stock at 24 and a quarter and my risk is 24.75, I'm risking 50 cents possibly to make myself $2 risk reward. I'm risking 50 for a possible 2-point trade. I'm in. So now I'm getting confirmation of bias because I think this stock's going to zero. I'm getting a gapped up stock that's breaking VWAP. I love that trade. And it's also confirming my bias. So when you get a trade that's confirming your bias and it's doing the VWAP confirmation, you by law have to put this trade on because everything you want in the world of trading is being demonstrated and exemplified and handed to you. Here, do it. And now you've won. And 80% of this trade is over, and they can't take the money from us. And you lower your stop to these levels where it broke, where it tried to get above. And now we're waiting to see. Now here's where I could use multiple time frames. So now that we got to the blue and the orange, I'm 100% expecting it to keep falling down to 22.31. But now I lock the trade up because I don't know. So I don't know it's going to keep going down. But what do I do know is I do know if it breaks back over this level, I'm getting out. And that's it. You just keep re-identifying the trade. Why am I still in it? What do I think is going to happen? And what am I going to do if it starts to go the other way? And if you could keep doing that, the quicker you can do it intraday, the better. And going back to what I'm going to launch soon is you're going to get an email. Okay, they've covered 75% of HIMS at 22.75. The new stop is 23.20. We're looking for 22.60, whatever it was. Wham. You get it in a nice email, text message, and now you know. And that's my plan going forward. So obviously, if you're here live, you're getting the best of all of this because I'm going to be doing it live. And then if you're not able to stay in the chat room, these products that I'm going to be unleashing are for you. And then also, even if you are in the chat room, getting a heads up the night before and the morning of the ideas with the charts would be a nice addition to what we've been doing here. And again, like I said, I've been working on this for 10 years. We're right there. This is happening finally, and I'm excited about it because there won't be any "I didn't hear you mentions it" like that credo long that nobody was involved in, and because you didn't hear me mention it. There was, when I was in that stock, it was because the day trade, we worked so hard to get those 2 points that I figured, you know what? We got a good price. Why not hold on to 100 shares? And the stock wound up going up, 12 points. Ain't bad. On 100 shares, it's $1,200. Pays for something. And now we're also going to build a new little spot on the Hit the Bid website. So when there is something that we are in, you'll know if we're still in it. And again, if you want to also call it a watch list, there's stocks that are on my watch list. I think you guys are familiar with it now. USAR. USAR at 1750 is almost as good as Alcoa at 5750. If the trade keeps working, go back. Right? Here it is again. The day trade yesterday on USAR, which was lovely. Once again, 1750, got paid. And then if you were still in it at the end of the day, that's how swing trading works. That's good swing trading, right? When you take the day trade that's worked and you hang in there with a little bit and get the follow through. And here we are. So again, if you are still living in this delusional world where the market goes down, bizarro world, I guess. If you live in reality, you see what this market's doing to shorts. It's impossible to be a shorter for any extended period of time. Now, again, the market is doing precisely what I thought it was going to do. sell off, give us glimpses of this sell off that I believe is going to be bigger. But the more it consolidates at higher levels, the less chance of a sell off that's going to come that's going to be any scary. And, you know, considering the Qs flirted with it, here's that yearly VWAP, here's the 9 month, right? Lower low, lower low, lower low, lower low. And every time we've bounced, what does that chart remind you of? Yes, Alcoa. Lower low, lower low, lower low, lower low still rips in your face. So even when you're in a downtrend in this market, you're still in an uptrend. You want to fight it and lose, or you want to accept it and win? So if I'm right and we do crash on March 20th, it's going to be coming from a higher level, which is good, but it's probably just going to be the same exact result. Maybe we do break down and we do test this level, and then what? We'll just rally again, which is exactly what I think was going to happen anyway. You know, I just wanted a bigger sell off to scare more people, so then the bounces will be even better. But right now, this market's starting to convince me that that might have been it. UVXY's crashed. You know, it's down almost 20 points from Sunday night. That's a huge collapse. UVXY is telling me that, you know, the worst might be over, which makes no sense to me, but I don't try to make sense of it anymore. That's what's keeping me still in this business. The notion that shorting is short lived is never been more apparent than these last 40 days of trading. Because these last 40 days, it seems like every day we're on the precipice of a possible rollover in a real bearish environment, and it never happens. So if you want to fight the market, you're going to lose. So going back to this conversation we've been having, or just stay within yourself, stick with the earnings reports, QQQ, UVXY, a couple of earnings reports, make money, shut the computer, go outside. It's 70 degrees today. And that's where you want to be. And then if you want to get away from the computer and you still want to have a lifeline to what we're doing, you'll get some Glix picks and some rangefinder alerts in your life. And then you'll never be lost. You'll never be without information. And we'll all have a nice 5-year run. And I got to tell you, if this market stays in this massive trading range, it's fine. This has been, no joke, the best start to a year ever. There has never been. I've never seen this many intraday reversals on the entire market this many times to start the year. Like I said, we've had 15 of those days that if you see one of them a month, you're good. We've had 15 of them already, and there's only been 42 trading days. You know, really is incredible. Done. Oh yeah, done trading. So that's it. It's still the same trades. So not much to talk about. Still the Qs, UVXY. I think the options are fixed now on the Qs. So before I go, let me show you why the QQQ daily options are something that everybody should become familiar with, right? Don't be afraid of zero date options. You're getting an opportunity to trade a $600 stock for $1. It's awesome. So, you know, you love a faux show bro on the Qs, right? But not everybody's buying a $608 stock. You know, obviously you got TQQ, right? But maybe you can't afford a $50 stock, right? QLD, all right? Maybe you can't afford to buy a $67 stock. So let's go back to the mothership, the OG QQQ trade, right? Instead of buying the stock, here you're just buying an at the money call for the day. So because it's a zero date option, they're as cheap as they can possibly be. So all you're trading is basically the stock, this option in lieu of the name. So the reason you also want to trade QQQ options is that they're liquid, right? So you're talking about March 10th. We're talking what, the 610s. But let's go back when the stock was actually breaking 608. So you went 608. Right? So there's the 608s. You know, talking 2 cent spread, and like we were talking about, you know, I still send limit orders when I'm buying and selling. Just my habit. It's the best thing to do. This one you could send market, you're going to get close to what they're showing you. But why even bother? I don't like sending market orders, even on the liquid ones. Just get into the habit of never sending market orders. Anyway, the reason you trade at the money options is it trades as if it's the stock. You see this chart? This is the QQQ 608s. Here's the QQQ chart. Here's the 608s. It's the same chart. So, but in this case, instead of laying out, and again, just to make easy math, 1,000 shares, you need to lay out $608,000. As my dad would say. So let me get something straight. You just laid out a $608,000 to make a grand. What's wrong with you? I'm like, well, that's kind of what trading's all about. In this case, this would make sense to my father. Here, instead of laying out $610,000 to make $1,000, here you're laying out 2,300 to make 2,300. Much better. So do not be afraid of zero date options. They're your best friend when dealing with the Qs, because now, to reiterate, you're able to trade a $600 stock for $2. And it generally moves in 2.5 point increments. Fake them out, shake them out, VWAP break, $2 entry. You're selling some at 365. You're selling some here 450. And right now, you'd still be in this trade and using just these low pivot points as your out. And that's the good thing about trading at the moneys. You're not worried about too much slippage or premium compression, but if you start getting into, let's say, the 613s, as much as you did well, right? Fake them out, shake them out. 30-cent option went to $1.30, right? Just, or even if you came in late, 50-cent option went up to $1.50 for 300%. These will start to expire or disintegrate quicker as you get into the further into the day, because now you only have 4 hours left and you're out of the money. So if you're in the money already to start, they won't disintegrate as much. And remember, it's not about if it's expensive or not expensive. It's about using them in lieu of the stock. You don't care about what the price is. But you just don't want to go too far out of the money, because if you don't get a parabolic move, these will start disintegrating And look, you just pulled in $1, these things have fallen 50%. And if we just sit here and consolidate now, you still got a chance to work out of your 608s, but your 613s are getting smoked now. You see the difference? And again, just to reiterate some of the points that we were making today, this is why, even if you were on board with me that the market's going to crash March 20th, you don't go out to March 20th and start buying 570 puts on the Qs. You're 3 weeks out. Who the hell knows what's going to happen in those 3 weeks? You will most of the time get a much better price just on March 17th. See where they are at, and then you think the market's going to crash 3 days from now, and then you could get something, probably 80% or 90% cheaper than what you were going to spend. Plus, why speculate on a crash in a market that ever goes down? Yeah, let's go. I need help. I don't know how to figure out where to place those red lines. Let's go. Listen, I took my prediction. I don't know if you were here, Sid, but Friday when I said, this is it. If anyone's going short over the weekend, this is it. And it worked. And now it's over. So we'll see if we readdress it. But UVXY has to be going up for me to get. But here, if you want to buy a 5, like, why would you do it? Right? So let's say you bought March 20th, 607. Let's go all prices, all dates, all prices. So we can't do that on this platform. So the March 20th, all. So I would buy the 580, 590s for $4. Why? Tomorrow you'll probably get them for $3.75. Market goes nowhere for 3 days, they go to $3. And then on March 17th, they'll be at $1. Then buy them if you really want to speculate. But going out 2 weeks for any option, it's just usually a bad trade. Unless you want to own a stock and you want to buy a leap and don't want to own the stock particularly. I do love leaps, but that's for buying and owning. Which brings having, living in the moment, trying to do as best as you can intraday, and then poof, leave it right there, because this has been, it's almost to the point where I've run out of words to describe the underlying bid. It's otherworldly, it's spiritual, it's magical. And whether they do rug pull it, we are still setting up, but UVXY collapsing the way it did, that's important, because the UVXY is so vital, because the UVXY is institutional put buying on the S&Ps basically, and they all just cashed out. So now it's equally as important, now that it's crashed back from 62 back to 44, if it catches a bid and then holds that bid and then follows through the next day, and listen, let me tell you something. If you see UVXY above Sunday night's levels, we're definitely in the middle of a crash, because you have to start thinking that you're not going to see it happen. And that's why it's more vital than ever that you must be watching UVXY, especially on that Fridays. Fridays are key, because it usually disintegrates on Fridays. That's how it's built. So when it's extra strong on a Friday, Hence the reason I was a fan of staying short over the weekend. Speaking of shorting, right now you're starting to see a little turn in the market, right? So UVXY is coming out of the Andy Dufresne, right? You got the Qs, you got to the 612.50, right? And that's all she wrote so far. 612.50 getting you back to the 610. So now new decisions are about to be made. The long trader that cashed out, this is where their stops will be. So they're going to use this as their stop. See how it just bounced off the red line? Now, why did I draw the red line there? The red line is just the high point from where we came and where we tested earlier. So that's why that line is important. Look how it's important again. So now if you bounce off here and roll, the idea is you're going to get through the VWAP, and then you're going to look to go back to the last real significant test was way down there. So the shorter, they're short already because they're getting short on this rollover because they can identify risk. If you're shorting the Qs with less than 2.5 points, that's good. And that's the shorter's mentality right now. They're like, all right, cool. We could short something right here. I'm risking 2.5, standard risk on a Q. And they'll know if they're right within the next 5 or 10 minutes. If they're right, they're going to start covering a little bit there and then look for it to retest the 607.80 area. Just like that Coles trade. You want to look at each chart, right? Somebody's short the stock, right? And this is why Glick's Picks is going to be awesome. So instead of you saying, wait a minute, Kenny, you were loving the stock long this morning. I got an alert. And now you're saying you're short? This is some criminal shit going on. Oh, wait, I just got the other alert. Oh, you sold it. Oh, now you're short. That's what we're going to be doing. So when a stock is a wonderful long, faux show bro VWAP break, you got paid, then the long trader is getting stopped out, and now it becomes a short. Blue lines back to orange lines. And that's why I don't want anybody not to understand what we're doing here and why this is the greatest trading environment ever. You're getting wonderful opportunities on long trades. And if you've missed the long, you're getting quite often a wonderful opportunity to short it right back. But you're doing it with purpose, with risk reward in your favor, understanding that the longs had their moment. Now the shorts have their moment. Just like HPE, right? The longs had their moment. Now the shorts are having their moment. Just like the Qs. The longs had their moment. Now the shorts are hoping for their moment. And that's why this trading environment it's exquisite. And you just have to sit and wait for these setups to arrive. And they always do. And then you go back and check some of your names like USAR, right? How fantastic is this stock at 1750? 1750 gets you 20 again. These trades keep working. That's why I don't mind this environment of the sideways. If it's as long as it's sideways in a big range, sideways is great. I'm just bearish that I think the sideways can result with a sell-off this time instead of a breakout. We'll see if I'm right about that. But I don't need to be right. And here's the part about that. I was very right about SQQ. Right? I was very right. We were buying it Friday at the close. Right? I was like, come on, bring it to me. Give me. Right? Buying it all day. Rallied into the close. Even buying more in the aftermarket. Held it over the weekend. Sold some. Sold some more. And then what I do? I held the rest into the open to only wind up getting stopped out at 75, otherwise known as shorting is short-lived and you're going to die. So still, very difficult to be a shorter, virtually impossible if you are playing by the rules. And look at that rule right there. Look how it held. It's just, as I call it, the rigging of the market. If something happens significant at a price, something tends to happen continuously. So now this bounce, and again, I know this is funny, but this level right here that just held could be new generational lows in a market that refuses to go down. So every time it pulls back and holds a new level, those legitimately could be the newest new levels of a bull market that has just been given birth to in a market that, say it, never goes down. You see how it always comes back to that same concept? Because if you haven't noticed, listen, I got some good drugs, but if you're still thinking this market's like in some bear market, then you got better drugs than I do. Let me get some of those. Actually, you know what? Keep them for yourself. I don't want those drugs. I like living in reality. But here, look at this trade, this geo trade, how it just found us, right? It's still on, right? You sold some. You got yourself a 1 minute multi-day VWAP break. You take a look at 2 days worth of VWAP. You just got there. How you doing? So yeah, you're selling some. And now what do? You go back to the 2? No. You go back to this level right here where it held it, held it, held it, held it. That's your stop, right? And now you're looking at the 2. And now let's see what happens at 3. So now you're thinking, all right, I might as well hold on there a little bit longer. As long as it doesn't break here, I'm expecting it to go there. And once again, you let the multi-day VWAP tell you what it wants to do, right? It's a living, breathing thing. Just go back and check 5 days worth of data, and then 10, 15, 20, monthly, yearly, decades, and you'll get a really good view of what any stock could possibly do. And then just stay focused. And here we are, right? Here we are. You know, a nice day, casual, you know. And just to bring it home a little bit, I was looking for the market to sell off today. I'm always looking for the market to sell off. But then it faux show broed. Am I going to be on the other side of this trade? Right? So this is one of those moments where when I say VWAP has saved my life, after yesterday's rally, I was coming in today going, that rally was bullshit. This market's definitely going down. I'm looking to short something, said my old self, who would lose $5,000 today. My new self says, chances are yesterday's lows are generational lows. We're never going down again. Oh, look, we're going down. All right, let me see what happens. I'm not going to get aggressive. You know, let's see. You know, 1 minute multi-day was way down there. And before I had a chance to decide whether I wanted to go short, we were faux showing and breaking back over the VWAP. Decisions made. Buy it. So instead of going short, once again, the long trade shows up and you just go long because the market never goes down. And listen, if it changes, it changes one day. And I'll let you know when it changes. You know when it changes? UVXY goes up 3 days in a row. 3 days. You can get 2 days. That third day is the key. If UVXY would have stayed green yesterday, the market would have crashed. But it didn't. So now that UVXY has crashed, the market's back on stable footing until it's not. And then hopefully I'm right and we get more of this volatility. I hope the market rolls over right now. I hope UVXY spikes again. And I hope to see UVXY at $80 so I could short it. So we could play the bounce on the market. It just keeps going round and round and round. And it's great. Right? Just like that. And again, This is one of those moments here, right? So if you saw me in Vegas and you heard me over the last 6 months, huge fan of VICR. And then it establishes itself as a short. And I said, this isn't easy. And I used quotation fingers because nothing's ever easy. But once it had that blow off top and the rollover, I said, you're going to be looking for a 30-point sell off. And what happened? You went down 30 points. And then you remember, the market never goes down. You got a faux show, bro, 2 days later. It's a cover. And now it's back to being that awesome trade. And this is the kind of trade that is an example of how I used to be. This is how I became a trader. We all had the experience of selling a stock and having it going up without us, right? Oh man, I just sold it. I can't believe it's going higher. We've all had that experience, right? So that's all I ever experienced. So when I became a trader, I traded the stocks that I owned, but I would just look to short them on the days of weakness. You understand what I'm saying? So if I own Cisco and I think the stock's going to $80, but it gaps up and it rolls over and it looks like a short, I would short it as a day trade and keep it in a separate account with my long-term aspirations over there, because I know if I sold the Cisco and then it sold off for a day and then start to rally 2 days later, I would never buy it back. So to alleviate that problem, I would just not sell my portfolio and trade around it. Kind of what we're doing here. So when you hear me saying, loving myself this Coinbase, loving Coinbase, loving Coinbase, Coinbase is a short, that might not compute to you, right? Just like the Coles trade, loving it long, loving it long, loving it long, and then it became a short. That's why I spend most of my time making sure you guys understand these concepts and knowing that you can take the other side of these trades. And blue lines and orange lines, they keep coming into play. The red lines are just the pivot points. And how you like this geo trade, which, right? This thing just started with that. Oh yeah, remember this one? Let's buy it. And we got in late. And look, it's not a stupendous trade. But from 1380, you sold some 1405. You're selling some here now. It's another day making trade. But also, if you lose on your next trade, now this one is supplemented or helped you to make the last next trade not so bad. The more winning trades you take, obviously, the better. So, obviously, it's Captain Obvious. But when you find a trade that sets up, take it. If you see a chance, you take it. And that's why shorting UVXY needs to be part of everybody's trading repertoire, because it's literally free money. And also, what's the word? Supplements? Yeah, I guess no one's going the whole day without losing on something generally. So if you keep taking as many winning trades as you can, the losers won't be so bad. Speaking of winning, look who just popped up. UEC, right? Possibly the most boring trade since StubHub, right? But one faux show, two faux shows, 1440, 1435, got you 1475. It's another winning trade. Earnings, VWAP, winning, staying focused, keeps you focused, keeps you disciplined. Earnings reports around VWAP. Go back to check HPE, right? Nice faux show, bro, long and decent short. USAR continues to go. If you guys are still on that, congrats. If USAR is moving, you generally want to go take a UUU. By the way, SMR. A lot of these stocks gotten hammered. I'm liking them now. They're down here. A lot of these rare earths and uranium stocks. And that's my story. So I'm going to cut it off right there. It's nice hanging with you guys. I hope you understand some key concepts. I will be doing another class, I think the first week in June. Um, Also, here's a bizarre question. If anybody would like to join the broadcast and maybe get on screen, talk about some chart setups, your anything. I'm going to be gone for 10 days. I'm trying to get I can't put it all on solid. Maybe day trader will help us out a little bit. Maybe even get Minotaur. I'm going to try to get Straza and JC and just get a group of people. So if you guys want to jump on screen while I'm away, just send me an email. We'll get you an admin login. You know, do some airtime, see what you learned, maybe some things that you've added to the charts, and yeah. But yeah, I'm leaving on the 18th, and I'll be gone for 10 days. And if you didn't know, that's why I said the market's going to crash on the 20th, because I'm in a mountain somewhere on that day, looking at the northern lights, and then going into a blue lagoon or something. All right, all right. Well, today was nice, right? Calm, collected. You understand. We showed you key concepts on how multiple time frame VWAP comes into play, how to stay focused on trades. Again, the idea that you can be on both sides of the trades, understanding risk reward. And this is every day. The more you see this stuff happen, the more you understand the key concepts. Stocks can only do a few things, right? Up, down, sideways. And then when you break it on down, as a day trader, you really don't need too many trades. Less is more. Quality over quantity for sure. All right. Nice hanging with you guys. I will see you later this afternoon. And then we'll be rejoining you tomorrow, Thursday, Friday. There will be no schmoozing, maybe for the month, unless Solid wants to grab you guys. But I'll be out the next 3 Thursdays, I believe. All right, so this and much, much more. Like I said, we're right on the cusp of unleashing something new finally. I think it's going to be a handy tool for everybody. The little video vignettes the night before, the morning of. And then obviously, if we can morph that into the alerts and the updates and basically the emergency broadcast system of trading. All right. Sarai. I'll see you guys later this afternoon. Be careful. See you guys. Do you hear the dog? It's like stalking me. I see you. Johnny fell down the well again. He waits to see if I'm coming. Johnny fell down the well? Apparently he needs to go out. All right, y'all. I'm really leaving this time. I know it's hard for me to leave. All right, be careful. All right. Um, I still think the March 20th could be in play because the market is playing out the way I thought it would be. Glimpses of a sell off, rally back, glimpses of sell off, rally back. complacency leads to a sell-off. But without UVXY above 50, I'm getting kind of skeptical whether or not this market is going to have another sell-off. But 2 days from now, who the hell knows, right? Some more bombings or something spooks everybody, and it's on. I'm liquid. All I got, I did buy more Rambus yesterday because I decided to hold on to some more. I went back to $88. My entire portfolio was short naked strangles on the Qs, and I think I got 400 shares of Rambus. I got some naked puts on Alcoa. That's it. Liquid and loving it, baby. Okay, dog, I'm coming. My God. All right, be careful. Seriously, I'm leaving this time.